Hutch Zagafi here, and today's topic is, what is a rate lock, okay? What is a rate lock, especially in today's market where the interest rates are very volatile? This is a big deal, okay? In today's interest rate environment, right now I'm shooting this video, it's October of 2022. Now granted, in 3 years from now, I'll be watching this video thinking, man, that was crazy back then, right, okay? But it is what it is. I've done this for 23 years as of right now. So, interest rate lock. Your rate gets locked in, and when your rate is locked, it is locked, okay? The rate doesn't move anymore. It's not affected by the market. Now the question becomes, when does your rate get locked? Naturally, here's what happens. Everybody wants the best interest rate they can get, especially if they know interest rates are going up. So you want me to lock your rate right now, lock it, and then it doesn't move. Now here's what I always tell people. Locked means locked. When it's locked, if rates go up, you're locked, you're good, it ain't going down. When rates go down, you're locked. Your rate's not going down. That's the reason the word lock exists. Now I'll get a little deeper on that one. You're gonna see some lenders out there say, we're gonna lock your rate, and if rates go down, we'll give you the lower rate. That's great, but this stuff costs you money. Nothing's for free, always remember that, okay? But let's first start with interest rates of where they come from. Right now, with inflation being where it's at, the Federal Reserve has been raising mortgage rates. That's why right now we're in the 6s and 7s and probably going up into the 8s even, okay? So rates are going up. So people out there looking for homes right now want to get locked in on these interest rates before they go up anymore. But what affects your interest rate? So let's focus on that more. Everybody out there wants the lowest rate possible. What goes into determining what interest rate you get, okay? What goes into determining that? Because not everybody gets the same interest rate. Well, let's see why they don't get the same interest rate. It starts with this, your credit score. The credit score is a huge determining factor of what your interest rate is. Again, we're talking about what's an interest rate lock? Well, an interest rate lock is just that. You're locking in the rate, okay? You're locking this thing in, you're locking it up tight, and it's not going anywhere. It doesn't move anymore, it's locked, okay? Stick a lock on it, like one of those padlocks, okay? But here's something for you. What rate do you get to lock, okay? Well, that interest rate, number one, is determined by your credit score. So the number one determining factor of your interest rate is your credit score. You've got to drive your credit score, that actual number, you got to get that thing as high as humanly possible so you can get the best rate possible. Especially in today's market, as the credit score goes down, subprime loans like those are gone. Those things have been gone for over 15 years, okay? But, so nobody's getting a high interest rate, but now what's happening with lower credit scores, if you're in the 500s, even the 600s, things like that, sometimes even the 7s, you are paying points. Points are additional fees you pay to get the interest rate that my industry is giving to you. Now, nobody wants to pay fees. Certainly nobody wants to pay additional fees, okay? So you want to pay the least points as possible when you're locking into a rate. You need to drive that score as high as possible. A very good benchmark to get the best interest rate today is a 740 credit score. So when you're walking into your bank, you're coming in there doing your checking, savings, depositing a paycheck, whatever you're doing. When you walk in and you see on the wall today's interest rate, that is a 740 credit score, okay? 740 is the benchmark to get to. Now, does that mean you're getting 20% interest if you're sitting on a 520 or a 580? No, it doesn't, but I'll tell you this one. Your credit score is sitting a little bit lower, you're gonna be paying more points to get that interest rate. So the biggest determining factor of the interest rate right out of the gate is your credit score. The second determining factor of your interest rate, the down payment amount. How much money you are putting down does affect your interest rate. Not dramatically, okay? Your credit score is dramatic. The down payment does not dramatically affect the interest rate, but it affects the interest rate, okay? So you wanna pay attention to the down payment. Now keep in mind, I've now given you the credit score, I've given you the down payment. It's sort of like making a cake, okay? It's a lot of different ingredients that ultimately get us to that final number that we then lock right in, okay? So we'll get to that part, but at the end of the day, credit score, down payment, let's go with this, type of loan you are getting. FHA loans have different interest rates than VA loans. They're not dramatically different, but they're different. VA loans have different interest rates than conventional loans. Again, they're not dramatically different, but they're different. Conventional loans have different interest rates than USDA loans. Not dramatically different, but different. So the type of loan you're getting also is factored into that interest rate. That will affect the interest rate, okay? Let's go to another one. Property type, okay? The type of property. Is it a condominium? Is it a manufactured home? Is it a single family home? Is it a 2-family? Is it a 3-family? Is it a 4-family? Is it well, I've already said 2-family out there. I mean, the property type absolutely affects the interest rate. I'm going to tell you this one. If you're buying a single family detached home, you're going to get a different interest rate on a conventional loan than if you're buying a manufactured home going conventional, okay? Manufactured homes and condos are on this side, single family detached are on this side, 2s and 3s and 4s are on another side over there. So at the end of the day, it depends on the type of property you're buying. Let me give you another one. Another factor of debt to income ratio, smaller factor, but it still exists, your debt to income ratio. What is your debt ratio? As your debt ratio goes up, sometimes there are pricing hits on the interest rate for higher debt to income ratio loans. Not all the time, but a little bit factors into it, absolutely. So every little bit counts. Now, all of this comes together to ultimately determine your interest rate. And when that interest rate is given, you get a locked interest rate. Now, another question is when does the interest rate get locked? Traditionally and typically, the interest rate gets locked in. If you're talking about a refinance, if I start refinancing you today and we start today on this loan, I'm locking your rate in today. We started today, you signed the application. Generally speaking, interest rates are locked as a norm or a standard in the industry when the borrower signs an official application. For an official application, you have to identify a property, you have to have the loan amount figured out, you have to have your down payment figured out, your credit has to have been checked, your income has to be verified, property values have to be estimated. So there's certain factors that make that. Typically as a standard and historically, that is when your interest rate gets locked. When you get pre-qualified for a loan or pre-approved for a loan, your interest rate does not get locked typically at that stage. Now, some people will say, I want to get locked at that pre-approval stage, right? That's fine. You have to talk to the particular lender. And does it cost you money? Do they take a fee from you? Do they charge you for a fee? Is it non-refundable? So trust me, if you get locked in at pre-qualification or pre-approval, nothing's free. It's coming from somewhere, something is happening, but pay attention to that. The general norm, and I know all the loan officers watching the video say, Hesh, with me I can lock you if you're just breathing oxygen. That's great, nothing's free, okay? The general standard and norm is to lock you in at the time of official application. Official application is if you're buying a home, well, if you're refinancing, it's when we're moving forward with your loan. If you're buying a home, it's when you found a house. When you got pre-qualified and pre-approved, you're not getting locked at those two stages, you are getting locked at the official application stage. When that rate is locked, it is locked for a period of time. In other words, I'm locking you in for 30 days. I'm locking you in for 60 days. I'm locking you in for longer than 60 days. The length of the lock is determined when we lock. How long are we locking for? Now you might want to sit here and say, Hesh, I want to lock for 10 years. The longer that rate gets locked, the more money it's going to cost you. It's just like I said, nothing is ever free. If the person you're talking to says, oh, it's all the same, it's not all the same, okay? They're going to tell you that to keep you from getting anxiety and shopping around and asking other people questions. But the truth is nothing is free. So when that rate gets locked, we lock it for a length of time. And when that thing's locked, it is locked. It's not moving. Rates can go up to 100. Your rate is locked in. That is done, that is finished. That is what a rate lock is. It locks in the rate such that the rate will not change between the start and the end of doing the transaction. And of course, that's what you're looking for. So when it comes to the question of, Hesh, what's an interest rate lock? And not only that, when do you lock the interest rate? Those are the data points we're looking at. Pre-qual, not being locked. Pre-approval, not being locked. Being locked at official application. When it's locked, locked is locked. If rates go up, you're locked. If rates go down, you're locked. Now, I guess one last thing before I let you go here on this video, you could say, oh, Hesh, but if rates go down, like I want the lower rate. That's fine, but what did I tell you? It's gonna cost money. The question becomes, how much does it cost? Where are they charging you at? Where are they getting the money at? It's not free, so you gotta watch that. So there's a little more to it than it is. I went through the specifics of what goes into getting the interest rate, and then what are the terms or thoughts on the actual lock itself. But that is the information on interest rate lock. So you wanna keep following videos like this to get educated and learn more about this, since if you're looking to buy a home, it's the biggest financial move of your life. You wanna pay attention that you're watching every single step and understanding it. So you wanna be subscribing to my page. I've got over 400 videos on this stuff. Like it, share it, comment on it, ask as many questions as you want, and keep paying attention because my next video will be coming out. We'll be watching that one too, and hope to see you then.